my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that drive the markets currently. So Peter, a new day, a new week, how have the markets behaved?
Well, we had an opening this week with the US dollar strengthening. Definitely recession worries tend to provide support for the greenback. However, we have also to note that the US dollar in the sentiment may have benefited also from the strong employment data which were released for June on Friday. It was characteristic that we had the non-farm payrolls figure which dropped far less than what was expected. At the same time, we had an unemployment rate which remained stable at 3.6%. There was a tick down of the average earnings growth rate, yet the rate remains at rather high levels and could still provide some support for inflationary pressures within the US economy. So overall, I would dare to say that the situation remains, I would say, relatively unchanged. The Fed still has the mandate to keep inflation under control, so we would expect that continuous rate hikes, possibly even outsized ones, could follow, and they may not be affecting the employment market that much, at least not yet. That could happen in future months to come, yes, but overall the Fed remains stuck to its rate hike path.
Has the yen been weakening?
Yes, the yen has been weakening. Actually, since today's Asian session has started to lose some ground against the US dollar, it was characteristic that it had reached a new 24-year low against the US dollar. USD JPY has seen such high levels which have not been seen since 1998. I would dare to say that the election results on Sunday, which more or less solidified Kishida's position as PM at least until 2025, which is the next scheduled election, more or less tended also to intensify the notion that the country's loose monetary policy will be continuing. And that tended to weigh on JPY. Other than that, okay, definitely the death of the shooting and death of Shinzo Abe, former Prime Minister of Japan, was quite dramatic, and I think the Japanese nation has still not come out of the shock yet.
Interesting. And how did the CAD behave?
Well, the CAD gained. There was a slight rise of WTI prices, which could have provided some support for the loonie. I would dare to say, though, that the rise was despite the adverse employment data for June, which were released on Friday. There was one exception, which may have done all the difference. It was that the wage growth index more or less accelerated substantially, and that tended to provide more support to the notion that inflationary pressures will continue to feed on wage increases. Thus, I would dare to say that CAD traders may expect an outsized rate hike by the Bank of Canada on Wednesday. For the time being, a 75 basis points rate hike seems to be almost fully priced in. So anything less than a 75 basis points rate hike plus a hawkish forward guidance could weaken the CAD. But for the time being, yes, there seem to be some bullish pressures here for the Canadian dollar.
And what about the pound?
Well, the pound weakened during today's Asian session. I would dare to say, though, that the pound seems to be stabilizing somewhat against the US dollar, yet that remains to be seen. For the time being, the bearish outlook is still present. The economic outlook of the UK is still dark. The possibility of stagflation is quite high. In that case, we may see practically low growth and at the same time high prices. I would also note that the resignation of UK Prime Minister Johnson is still an issue. The race for his replacement is on, and a number of candidates are popping up left and right. I think it's going to be providing some uncertainty in the UK political scene. On the other hand, the fact that we have a continuation of Tories tends to imply some stability, so that one may be cancelling out the other. We'll wait and see how this thing actually plays out.
And what about the euro?
The common currency, the big issue fundamentally for the common currency today, the headlines were definitely that Nord Stream pipeline comes under maintenance period, which means that it will be shut down. It would be a painful reminder for Euro traders of what could happen should the Russians actually cut the supply of natural gas to Europe. But overall, I see that the situation is going to remain rather steady. Now, the Europeans will have to stockpile as much gas as possible for an event as, given the uncertainty created by the war in Ukraine, we may have frictions, further frictions in the Euro-Russian relationships, especially should there be a sixth wave of sanctions against Russia. On the other hand, the outlook on a monetary level seems to remain unchanged. Now the ECB is about to hike rates in July, and probably that will be followed by a greater rate hike in September. I would be more worried about the macroeconomic outlook of the Eurozone. Growth seems to be dropping. Inflation remains high. I would like to see more action here.
Moving to the commodities front, are oil prices on the rise?
Oil prices rose on Friday. If I'm correct, that was for the second consecutive day. I would be highlighting, though, also factors which could weaken oil prices. So we have new lockdowns in China, which could imply a weakening of the demand side from the Chinese. And that could weaken also, could weigh on WTI prices. At the same time, recession worries and slowdown on a global level of the economy could also create some bearish tendencies for oil's prices. Yeah.
And what's on the calendar for today, Peter?
Well, we have a rather slow calendar today. We had already Norway's CPI rates. Those were for June. The rate accelerated more than expected. And I would dare to say that could drive Norges Bank to another rate hike and solidify its hawkish stance. I would also be noting on the monetary front from the Fed, New York President Williams, which will be speaking in the American session today. During tomorrow's Asian session, we get from Japan the corporate goods prices growth rate. Should there be an acceleration, we may see that inflationary pressures within the Japanese economy are still being preserved. A little bit later, we get from Australia the NAB business conditions and business outlook. Should we see an improvement on the indicators, we may see they're also getting some support.
Any final comments?
Well, we're entering a very interesting week. I would be noting for the Eurozone the CEF indicators. I know we have also the final HICP rates of Germany and France, but I think the preliminary releases may have already absorbed most of the market reactions there. So I would be focusing mostly on how Germany's outlook is and how the current conditions on the ground for the largest economy of the Eurozone are. For the time being, forecasts are for the indicators to drop, so that's not exactly good for the euro. For the US dollar, I would be highlighting, and that could be the financial release of the week in my opinion. On Wednesday, the US CPI rates, they are for June. They are expected to accelerate both on a month-on-month basis as well as on a year-on-year basis. And should that be the case, we may see the US dollar gaining, as that would imply that inflationary pressures are still high and the Fed would be under pressure to actually act faster and tighten its monetary policy faster. I would also note on the monetary front, RBNZ's interest rate decision from New Zealand. Now, it was characteristic of the market's hawkish expectations that the market practically on Friday was, I would dare to say, pricing in a 25 basis points rate hike. Today, during the European Open, we saw the forecasts once again. The market is now pricing in a 50 basis points rate hike. So practically expectations for RBNZ are high. And should the bank fail to deliver both on a 50 basis points rate hike as well as on a hawkish forward guidance, we may see the Kiwi weakening. Otherwise, we may see some support for the NZD. I would be highlighting also BOC's interest rate decision for cat traders. Cat traders naturally are also concerned for oil prices, but on the monetary front, BOC's interest rate decision is going to be probably moving the Canadian dollar, as a 75 basis points rate hike is expected. Should that be delivered and possibly accompanied also by a hawkish forward guidance, we may see the CAD getting some support. And the final release, I would be highlighting also the Aussie, the Australian dollar. We have a high number of high impact financial releases from China. We get the trade data with the input growth rate, which directly affects Australian exporters of raw materials. And I would also be highlighting China's GDP rate for Q1, as well as the industrial output growth rate, which also directly or indirectly affects the Aussie as well. While from Australia as such, we are highlighting the release of Australia's employment data. Should there be an indication that the Australian employment market tends to remain tight, that could provide some support for the Aussie, as that would boost the confidence of the Reserve Bank of Australia for further rate hikes in the coming months. Last but not least, given the worries about growth in the UK economy, I would be highlighting also the release of UK's GDP rate. And that's on a month-on-month basis, along with the manufacturing output growth rate. Should we see an improvement and acceleration, we may see also the pound getting some support, as that would be encouraging for pound traders.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yassir.
So, welcome to the technical analysis part of the presentation today. In front of your screens, we have practically the USD index for our chart. You can see how the price action of the US dollar index has risen. And let me readjust this. It's once again nearing the 107.55. Give me a sec. There we go. Now, the price action of the index has risen during today's Asian session, early European session. I would be noting, though, that the seems to be finding considerable resistance at the 107.50 and has stabilized somewhat. On the other hand, the RSI indicator below our 4-hour chart is pretty high, actually near the reading of 70. Should the index be able to break above the 107.50, the next level noted would be the 109.50, while a stabilization could also occur between the 107.50 and the 105.55. Please note though, let's have a look here, that on a monthly basis, this is a record high level for the index. If I'm correct, that's beyond 2002. In any case though, it's pretty high, and that may be creating some concerns among the bulls for further advancements. Maybe a little bit difficult. For the time being though, a bullish outlook could be expected. On the other hand though, we highlight the stabilization and the difficulties that the index has on jumping above the 107.50 resistance line. Note though also how the Bollinger Bands have converged, yet on the other hand have a slight upward slope. It's characteristic how the 20 moving average, which is also Bollinger Bands median, has diverged from the 100 moving average and showed a fast acceleration of the rise of the index. So we have covered the sideways movement possibility of the 107.50 and the 105.55, albeit the levels here tend to imply that there is another support line, a mid-level, which should be taken notice of. On the other hand, should the bulls maintain control and force the index higher, breaking the 107.50 and start actively aiming for the 109.50. Should the bears take over, which doesn't seem probable, but it's still a possibility and should be covered, we may see the index dropping, breaking the 105.55. Actually, the breaking of the S1 105.55 would be a prerequisite on our side for the adoption of a bearish outlook for the index, and we may see it starting aiming for the 103.20 support level. For the time being, once again, note how the price action's volatility has lowered, and the price action actually finds difficulty in breaking the 107.50. Also note how the upward movement, which was evident for the index from the 5th until the 6th of July, has now been interrupted. Okay, let's have a look at EUR/USD. EUR/USD, where we have a similar picture on the reverse. The price action seems to be stabilizing between the 1.0210 and the 1.01. Note how close the parallel level for the pair is. Once again, though, I would note that the pair hasn't reached or hasn't seen such low levels since 2002. And should the 1.01 be broken, the next possible target for the bears of EUR/USD would be parallel level, and below that we note the 0.9870. For the time being, we highlight the fact that the price action has reached once again the lower Bollinger Band. It seems to be stabilizing somewhat. Also note how the RSI indicator has a clear downward inclination, aiming for a reading of 30, indicative of a rather bearish sentiment on behalf of the market for the pair. Should the stabilization be maintained, we may see the price action actually moving between the 1.0210 and the 1.01. While should the bulls take over, I would require at least for the pair to break the 1.0210 and actually start aiming, if not reaching, the 1.0355. that would be implying a decisive bullish movement to the upwards, which could also break the 1.0355 and start aiming for the 1.0480. Let's have a look at cables for our chart, also in sideways movement. Let's readjust this one. On the other hand, though, we note that the bearish trend line is still active, and we have conflicting info here, which should be noticed. Why do we have conflicting info? Now, the direction under any given circumstances would be bearish, given that the downward trend line is still valid. That's clear. Also, the RSI indicator has just broken below the reading of 50 and is aiming downwards, another indication for a bearish sentiment. But there is a catch. On a technical level, we can see how we have lower peaks, consecutive lower peaks, and lower trows until here. This one's higher. And the fact that the pair was not able to score another lower trough could be an indication for some stabilization for the pair. We're always talking about GBP USD for our chart. Should the bears maintain control, I would expect it to break the 1.1935 and start actively aiming for the 1.1815. Should the S2 be broken, we may see the price action start aiming for the 1.1640. On the other hand, should a stabilization be present for cable, I would expect it to break the downward trend line, which we have mentioned. It's like a triangle has started to form. And it's a bearish triangle. Nevertheless, should the stabilization be present or take place, we may see the price action actually bouncing on the 1.1935, reverse direction, break the downward trend line, and that's crucial. That would be the first sign of a changing trend, and aim for the 1.2070, yet respect the level and maintain the movement confined between the R1 and the S1. Should the bulls take over, which does not seem to be probable right now, but it's quite possible still, we may see the price action A reversing direction, breaking the pre-mentioned downward trend line. That would be a first sign of a changing trend. I would require, though, also a clear breaking of the 1.2070 to switch our bias for a sideways movement in favor of a bullish outlook, and possibly even a possible touch on the R2 1.2175. Note how we have a downward triangle here. Okay, let's have a look now at USD JPY. USD JPY, which has risen, it's not so decisive, but if we drill down to the 1 hour chart, that could become more clear. Note the upward trend line which has started to form here. One peak, throw, peak, throw. Now the next peak has to be somewhere here. So if we drill down back down to the 4 hour chart, the pair practically stepped on the mid level of 135.60 and broke just above the 136.75, which now turns into support line. Our chart doesn't go back enough. We only go back up until 2001. This level has not been seen. You could see it from the chart in my office. Now this level has not been seen since 1998, practically in this year. But it's a new record high for the pair. And that would bring us back to 142.60. In red, please. Oh, sorry, that would be 142.50. So let's make the necessary adjustments. Keeping a stepped approach here. Final resistance line being placed at 141.50. I know there are some resistance levels back in 1998. However, to tell you the truth, I don't know how relevant they are anymore. We're talking about 24 years back. So I would be quite hesitant to adopt such levels. $138.50. $136.75. $134.45. And finally, the final support line being placed at 133. There we go. So we tend to maintain a slight bullish tendency here as the pair has surpassed the reading of 136.75, which used to be a resistance line, now has stabilized somewhat, which tends to imply some stabilization, but we see the case for the bullish tendencies to be maintained. The stabilization may be also due to the fact that the price action has reached the upper Bollinger Band, which has forced it to remain rather low. Should, on the other hand, though, we would highlight also the fact that the pair is at record highs, 24-year record highs, and that may be giving the bulls some cold feet. Should the bulls maintain control, though, we would expect the price action to, let's delete this, start aiming actively for the 138.50, if not reach it. On the flip side, should a stabilization occur, we may see it revolving around the 136.75, in which case we would have to readjust our support and resistance levels once again. Should the bears take over, which may be a little bit difficult right now, we may see the price action breaking the 136.75, breaking the mid-level, breaking even the 134.45, and start to aim for lower grounds. It's quite an interesting pair of how it will react in the following hours, in my opinion. Probably could get some more support at the American Open. However, that will depend largely on the market sentiment. On a technical level, once again, highlight the slightly bullish sentiment. Also the fact that the price action has reached the upper Bollinger Band, actually broke it at some point, which may have kept it at bay. Let's have a look at USD CAD. USD CAD, which has been rising slightly for the past 12 hours. It would look like the downward motion was interrupted. However, that remains to be seen. It could be another lower peak, and if that's the case, we may see the price action. Practically what we're seeing is the formation of a downward trend line here. You see we have one peak, then a lower peak. We have one show, then a lower show. We have one peak, a lower peak. Should the next one be somewhere here, and the price action reverses direction, breaks the 1.2970 and actively starts aiming for the 1.2865, that would signal practically the formation of a downward trend line, and that would make us more certain for the pair's direction. On the other hand, we have to note that the RSI indicator below the 4-hour chart seems to be revolving around the reading of 50, which now has a rather upward slope. Yet I would require practically for the RSI indicator to actually aim for the reading, if not test the reading of 70. In which case we may see the price action breaking the downward trend line, testing the 1.3075, and that would be a signal that the price action has changed direction. Should the R1 be broken and the pair starts aiming for the 1.32, that would be signaling possibly a bullish outlook. Should the bears maintain control, we may see the price action breaking the 1.2970 and start to actively aim for the 1.2865. Okay, let's also have a look at the second commodity currency, which is AUD USD in this case. AUD USD, which tends to maintain a sideways motion, which is clearer. There you go. It seems that the pair has found support at 0.6760 repeatedly and has stabilized somewhat, while on the flip side, seems to be finding resistance at the 0.6860. Thus, the price action remains encapsulated between the two levels, the R1 and the S1, implying a rather sideways motion. We would require to change our bias for sideways motion. We would require clear breaking of either the R1 for a bullish outlook or the S1 for a bearish one. For the time being, once again, the RSI indicator seems to be revolving around the reading of 50, maybe with some slight bearish inclinations as the RSI indicator is dropping, reflecting possibly also the downward movement of the pair over the past 16 hours. Now, should the bulls take over, we would expect the price action to reverse direction at some point, break the 0.6860 and start actively aiming for 0.6950, maybe even test it. On the flip side, should the bears take over, I would expect the price action to break the 0.6760, which provided support here, and start actively aiming for 0.6620, which hasn't seen any price action since. Let's have a look. Okay. Yep. Link to the weekly charts. That was for the last time, practically. Yeah. That's since 25th, end of May 2020. So it hasn't seen any price action for over 2 years. Let's roll it back down to the 4-hour chart. Okay. Let's have a look now also at USD CHF. with an upward movement which is still ongoing. False break here and here and here. Very, very, very steep, I may add. Here you go. So delete this one and this one. Let's clear the picture just a bit. Note also the upward motion of the RSI indicator. Now the crucial part is once again that the RSI indicator has risen, yes, and has reached above the reading of 70, which may be implying that the pair has reached overbought levels and may be ripe for correction lower. At the same time, note how the price action is practically flirting with the upper Bollinger Band and could try to keep it a little bit at bay, but on the other hand, the Bollinger Bands have a clear upward inclination which tends to reflect the upward movement here. For the time being, we maintain a bullish outlook for the pair USD CHFs for our chart, as long as the price action remains above the pre-mentioned upward trend line. And should the bulls maintain control, we may see the pair reaching, if not even breaching, the 0.9875. On the flip side, should a stabilization occur, we would initially expect it to remain between the 0.9875 and the 0.9765. However, it would require clear breaking of the upward trend line, signaling a reversal in the trend. A bearish outlook, however improbable it may seem at the moment, still another possibility which we would have to cover. And we would expect in such a case the price action to reverse direction, break definitely the pre-mentioned upward trend line, and break also the 0.9765. And for the pair, given the steep upward movement, and to make sure that it's not just a correction lower, but an actual trend reversal, we would require the price action to start actively aiming for the S2 0.9640. Let's have a look now at the Kiwi. The Kiwi, which has remained in a rather stable condition. There we go. Very, very stable sideways condition between the 0.6215 and the 0.6120. We're talking about around 95 pips. Yeah. It's pretty tight range-bound movement here by the Kiwi against the US dollar. We tend to maintain our bias for the sideways motion of the pair between the pre-mentioned levels, the 0.6215 resistance line and the 0.6120 support line, as long as the price action remains between those levels. Should the price action find extensive buying orders along its path, say for example, if the market starts to price in an excessively hawkish stance on behalf of RBNZ on Wednesday's Asian session, as it's going to be delivering its interest rate decision, we may see the price action rising, breaking the 0.6215 resistance line, and start actively aiming for 0.6290. That would be another 75 pips up. To the flip side, should the bears take over, we may see the price action reversing direction, breaking the 0.6120, and start actively aiming for 0.5990. That would be around 130 pips. Let's have a look now at gold's price. Gold's price, which has also remained in a rather sideways motion between the 1752 and the 1731. I would have to note that the price action has become even more tight, even more range bound. We tend to maintain the bias for sideways motion of the precious metals price. Yet, I wouldn't be surprised to see some bearish tendencies here, given that the RSI indicator is pretty low. It's actually at the reading of 30. And that would imply some bearish sentiment on behalf of the market. And should that be displayed in gold's price action, we may see the precious metals price breaking the 1731 and start actively aiming for the 1715, if not even break it. In which case, we may see the price action aiming for the 1700. On the other hand, should the bulls take over, despite the downward inclination of all three moving averages, and the price action breaking the 20 moving average, breaking also the 1752, that would be a prerequisite, and start actively aiming for the 1770, we may be forced to switch our bias for a sideways movement in favor of a bullish outlook for the precious metals price. Okay, let's have a look now at WTI. WTI, which had curious movement, you can see how there was an upward direction here. The commodities price had started to slowly start building an upward trend line, however that was broken. It was interesting how the commodities price actually broke the 101.25 and had started to aim for the 105.10. Yet that was interrupted, and the price action has now a downward movement. It's characteristic that the RSI indicator has broken just below the reading of 50, which may imply some stabilization on behalf of WTI's price. I wouldn't be surprised to see the price action stabilizing and revolving around the 101.25 resistance line. That would be a clear indication of a sideways movement here. Fundamentals, though, may drive oil prices lower. In that case, we may see WTI's price also being adversely affected. And I wouldn't be surprised, should the best take over, for the commodities price to reach, if not breach, the 95.70 support line and start actively aiming for the 92.60 support level. Let's have a look now at Dow Jones. Dow Jones, which had some bullish tendencies, however, retreated below the 31,345, and that allows us to maintain a bias for a sideways movement. Let me make the necessary adjustments here. Here we go. So we tend to maintain a bias for a sideways movement just below the 31,345. Should there be any bullish tendencies, we may see the price action breaking clearly the 31,345 and start actively aiming for the 31,955. We're talking about 610 ticks, which is possible. It's possible given that, if you can see, we're in Dow Jones's 4-hour chart. So you can see that the index has covered this distance once here. That was around the, give me a sec, 620 ticks. That was on the 28th of June. And it did it again here. That was around the yeah 500, 600 ticks around the 5th of July. So the index has the capability of covering such a distance in a rather short period of 4 hours. I would be highlighting though that the stability of the price action, the fact that the RSI indicator runs along the reading of 50 implying a rather indecisive market, also the fact that the price action is just between the moving averages of the 100 and 200 moving averages, at the same time also supported by the 20 moving average, once again would imply some stabilization here. I would like to see though how the American Open will be today in order to draw some safer conclusions about the market's mood though. I would also like to see Nasdaq, which seems also to have stabilized after breaking an upward motion. Let me readjust this right here. Initially it looked like a shifting to the right, but the stabilization took place around the 12,145, just below it actually. The big question is today's opening, especially about Twitter. Twitter's chart has been a nightmare over the past few days, with Twitter's price dropping heavily. Given that Elon Musk may be about to, or is trying to exit the takeover deal, so that's definitely a negative. Now, Twitter has stated that it will try to legally enforce the deal to go through. However, that remains to be seen. It's quite doubtful. In any case, that will take some time. Should it go to court, special should go to the court. And it's quite worrisome of how will the heavily indebted Twitter behave in the next couple of months. For the time being, I would like to note that Twitter as well as Tesla may start weighing on Nasdaq's price, yet for the time being, Nasdaq seems to be holding some ground, which is a positive. So once again, going back to the original subject, Nasdaq's price action seems to remain in a tight range-bound movement, just below the 12,145. Should the bears take over, I would expect the price action to drop heavily, break the 11,000 test, if not break the 11,730 support line, and start aiming for the 11,340. On the other hand, though, we have to note here that the RSI indicator is between the readings of 50 and 70, which could be implying some optimism on behalf of the market. And should the bulls take over, we may see the price action of Nasdaq rising, breaking the 12,145, and start to actively aim for 12,445. Final equities, US stock markets index would be the S&P 500, with a similar stabilization just above the 3,855. That would be support line. We tend to maintain our bias also for a sideways motion to be maintained as long as it remains between the 3,855 and the 3,950 levels. Also note how the RSI indicator is running, I wouldn't say along, but just above the reading of 50. That should sum it up for the day from all of us here at IronFX. Best wishes for solid trading.
Hi everyone, my name is Emily and today we are going to talk about the affiliation program. So what is an affiliate program? To simply put it, an affiliate program is an agreement in which a business pays another business or individual a commission for driving traffic or sales their way. Within the world of forex trading, this involves a forex broker and a forex affiliate, with the affiliate referring clients to the broker. So how does this work? Firstly, you register as an affiliate with IronFX. Then you share your referral link with your network on your website or your blog. Then you get your client to click on the link, register with IronFX and start trading. And then last but not least, you receive a commission. The question is how to join our affiliate program. The first step is to register as an affiliate in the IronFX portal. Then you have to log in to your affiliate portal and get access to a wide range of marketing material. Then you get your referral link and use the promotional material on your website or other. And last step is you start earning commissions through one of the most popular forex affiliate programs for each client you refer to IronFX. Thank you so much for joining us today, guys. See you tomorrow. Bye-bye.
The advanced stuff, the institutional, great stuff, the juicy stuff that'll take your trading to the next level. All right, it'll be a very fun journey. It'll be showing you how to get access to the VIP rooms. It'll be showing you how to get access to various places to help you really sharpen your arsenal of trading strategies. All right, so let's begin. Right, remember, as usual, I need to let you guys know, disclaimer, that this webinar is purely educational in nature. So nothing in this webinar should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, because trading CFDs is dangerous, right? So always exercise caution before you trade. Okay. Now, for those of you guys who are seeing me for the first time, right? For the first time, it's like, who's this young dude, right? Who's here teaching us, right? I'll give you a quick introduction to your host for today, right? My name is Desmond Leong, right? My name is Desmond Leong. I run an award-winning research firm, right? Everest Fortune Group. We are finalists for Best FX Research and Best FX Research for 2019, 2020, and 2021. And also Best Equity Research for 2020 and 2021, right? So we got a whole bunch of awards. We got a strong team of traders over here. Over time, you'll be seeing me. You'll be seeing this other girl called Cassandra. You might be seeing this other girl called Annabelle, right? They'll be all coming in and sharing webinars on different levels, right? But for today, you have me, right? And I will be teaching you. I'll be guiding you on how to be a better trader. And as you can tell from from my picture, from my video, I'm not that old, right? Pretty young guy, right? Trading full time for a living, right? Running entire team, entire prop trading firm here. And if there's any word of encouragement I want to share with you guys, is that you don't need to spend 30 years, in Bloomberg or in the industry just to be a good trader. You just need to spend 30 days learning the right stuff to be a good trader. Okay, you don't need 30 years, you just need 30 days learning the right stuff. And the thing about trading, right, I just want to set the tone for all of us who are beginning this journey together with me, right, is that trading is very different from the world of academia, right? So, when we're studying, when we go to schools, right, when we go to class, right, when we take exams, right, how much we study usually is directly positively correlated with how good we are going to do, right? The more we study, the better we do. It is very, there's a correlation there. And therein lies the problem with trading, because a lot of us who are good at studies, right, they think that, all right, we are good with studying, so we should ideally be good with trading, right? The more I read on Baby Pips, the more I read on Forex Factory, the more I'm going to trade better, right? But that is far from the truth, because in the world of trading is very different, right? You need to throw in your emotions, right? And you need to learn. You can learn the right stuff, and equally, you can learn the right stuff, and the scary thing is that you can learn the wrong stuff. Okay, you can learn the right stuff and you apply it wrongly, and you end up losing money, right? So that's how the trading is. It's very different from the world of academia. We cannot associate knowledge with profitability. Okay, we cannot associate knowledge on how to trade forex. All the different trading strategies, all the technical indicators, stochastic RSI. We cannot associate that with being a good trader. Okay, I can teach you a very advanced stuff like Elliott wave, right? I can teach you Elliott wave, right? But if you try to apply it to a different style of trading, like maybe apply it to a single instrument, you're not going to make money, because Elliott wave requires you to look at the correlation of all the markets, for example. Right, so it's a very, very dangerous thing that we're looking at over here. In trading, you need to learn the right stuff, and you must avoid learning the wrong stuff, and must avoid applying the wrong stuff. Okay, and in this webinar, I'm just going to share with you my journey. How I've went from literally nothing to being a good trader. Right, it took me over 7 years. I learned the right stuff, I learned the wrong stuff. Right? I blew up many accounts. Right, and how I finally reached a stage where now I run an entire prop trading firm. Trading profitably. Right, I learned from the best previously. I'm going to share these things with you. I'm a heavily technical trader. I focus a lot on technical analysis, right? And I'm going to share and try and impart as much of this knowledge as I can to you. The scary thing I do want to share with you is that most of what you find online, right, is not the right stuff. Amazingly, it's not the right stuff, right? You might find stuff on Baby Pips, Forex Factory. You might find stuff, this Investopedia, right? They have an interpretation of, for example, how to use a very simple stochastic indicator, but my take on it is very, very different from it, right? Because I found that a lot of what the world teaches tends to be from the wrong point of view. It's a very, very retail kind of point of view, right? I'm going to share with you from an institutional perspective, right? How we look at technical analysis, how we look at fundamental analysis, how we look at trading strategies. We're going to debunk a lot of different different approaches to trading. Like a lot of people like to use a fixed stop loss and take profit, but that is the worst thing to do, for example, right? And I'll be sharing with you that in the upcoming webinars. I'll be showing you how to get access to it in a bit, right? But if anything, I just want to set the tone for you guys that, you don't need 30 years to be a good trader. You just need 30 days learning the right stuff, right? And we have a very special partnership with IronFX where zero compromises and bring you guys the best education you can get, the stuff that you probably need to pay a lot of money out there, right? A couple of $1,000s just to go through, bring it to you guys. Let's make this fun and interactive. There's a chat section there for you guys. If you have questions, I recommend ask them right away, right? I literally have another screen open over here, monitoring the chat that is coming through. Right? I'll do my best to answer them when I can. Right? Because usually by the end of the webinar, we hardly have any time to answer any of the questions, right? So if you have anything that pops up halfway through, just send it through, all right? Now, let's begin to this session, right? What is the agenda for today? A few things we're going to touch on, all right? Introduction to the world of trading. What exactly is Forex, right? I'll be showing you a little bit about my take on it, right? Explaining it in very layman terms for you guys to understand, because honestly, I am not a big fan of jargons, right? I'm not a big fan of making things complicated, right? The big words out there. I like to keep it simple, and I want to show you that if we keep it simple, it's very simple. Trading can be very simple. All right. So be filtering through the noise of jargons, and then we're going to answer some key questions that many people usually have when it comes to trading. How much time do you need to trade? Right? Do you need to trade 8 hours a day? Right? Do you need to trade 4 hours a day to be a good trader? Right? What kind of trading strategy is the best trading strategy? scalping, day trading, swing trading, what kind of strategy is the best, right? How much time do you need to really master trading, and how do you go about mastering trading? Is there a step-by-step plan, right? I'll be sharing with you that later. Very exciting stuff. Which products should you focus on? IronFX offers a lot of products to trade, right? A whole wide range of them, FX, commodities, indices, right? So many of them. But what products should you focus on to trade, right? And what trading strategies work better for which products? We'll be touching on it later, right? But if you have questions, shoot them right through. All right, guys. And then lastly, you're going to touch on, if you have time, different approaches to trading. Okay. Now, let's continue on to the session. Okay, bear with me. Sometimes I talk too much, I talk too fast, and I lose my voice. Right? Okay, let's begin to the session. All right. So what exactly is forex and how does it work? So the short answer to this is that forex is actually, if you think about it, right, now that the borders are open, I'm not sure which countries you guys are from, right? But now that borders are open, we might be traveling around. We might be traveling around a bit, and the places that we're going to see is we're going to see the money changers, right? There are so many money changers around, and that's the amazing thing. Forex is essentially just like money changers, okay? It is exchange of currencies from one currency to one foreign currency, right? Well, foreign currency to foreign currency, right? Local to foreign currencies. Basically, what is forex? It's just foreign exchange, right? Now, taking one money and giving it to another person. Let me put it into a form of an example of something which we might be very familiar with, right? Because maybe you're exchanging some money to go on holiday, right? So let's talk about a scenario over here, right? Maybe I'm in the US, right? I'm in the United States, and I want to go to Japan. Okay, I want to go to Japan, right? I have $1,000 with me now. Okay, I have 1,000 USD with me. Okay, 1,000 USD. I go to the money changer, and I get $100,000 yen, right? $100,000 yen, as you can see over here, right? This is before the holiday. Okay. I go on a holiday, right? So I'm now in Japan, right? I'm going to Japan. I'm on holiday. I'm eating sushi. I'm eating my sashimi. I'm eating my well, not wasabi, right? Just eating all the different food I have, right? Eating all the different food I have. Having my time of life in Osaka, right? And now I come back from the USA, right? Now I come back from Japan, and I come back to the USA. Okay. Before I went to the USA, before I went to Japan, one USD equals to 100 yen. Okay. One USD equals to 100 yen. When I come back from the Japan, now my one USD is equals to 110 yen. Okay. I still have my yen with me now, right? I have not changed it back to USD. Okay. I have not changed it back to USD. Guys, if you can, you want to try it, take a shot, right? I can see Donald raising his hand, right? Did we make or did we lose money? With one USD is now stronger. One USD is now worth 110 yen, right? And we just came back from Japan. We want to change some money, right? Did we make or did we lose money? Anyone want to take a guess, right? Anyone want to take a guess whether we made or we lost money? Right? I know it's you guys can send me the answer, directly to a host and panelists. You can send to everyone, right? It depends whether you want to show it everyone, you want everyone to see it, or you want to send it in I noticed some of you guys in Q&A. If you want to send it in the Q&A, that is perfectly fine too. All right. But what I want to share with you guys is that what happened basically is that the USD strengthened, right? The USD strengthened. So now previously your one USD, right, is worth 100 yen. Now your one USD is worth 110 yen. So you can get more Japanese yen with a single US dollar. Correct? You can get more Japanese yen with a single US dollar. But the problem with this, so that means the yen is weaker and the USD has strengthened. In this time where we are away in Japan, the yen has, it has weakened and the US dollar has strengthened. The problem is that we have yen, right? Hey, Kakana, nice to see you tuning in from South Africa. Welcome, right? Thanks for joining us, right? So yeah, the problem is that we have the yen, so we need to convert it back to USD. And because the yen is now weaker, right? That means, we can exchange it for less USD. So even though our base currency, we feel like, oh yeah, USD has strengthened. But if we were holding onto the wrong currency at that point of time, right, we end up losing money. Okay, so in this particular scenario, we have lost money, right, because we're holding onto the yen. However, you think about it, it's very close, However, when we came back, right, while we are coming back, before we reached back home, we converted the yen, right? We converted the yen to USD, and by the time we came back, then it strengthened. Then we have made money, right? So this is very time sensitive, right? The whole concept of foreign exchange, is very time sensitive. Okay. Now, all right, Darlington, nice to see you guys tuning in from Nigeria. Welcome to the webinar, right? Nice to see you guys here, right? Hope you have a good time, right? A good time. If you have questions, remember send them through right away. I can see your messages come through, right? So I'll do my best to answer them all along the way. All right. Now, right, Cyril, nice to see you guys. Nice to see you from South Africa. Well, a couple of guys from South Africa. I'm just curious. I can see quite a number of you guys in this webinar. Could you guys share with me which countries you guys are tuning in from, right? And if you want, you can guess which country I am from, right? So I'm pretty sure not many people can guess which country I'm from, right? But yeah, it's you can share with me which country you guys are from. That'd be pretty awesome. Okay, right? Wait, is it Natalia from London, UK? Oh, that's great. That's great stuff, man. Welcome to the webinar. We have another person from South Africa, right? Mokonoto, right? Quite a number of you guys tuning in from South Africa. That's nice, right? So anyway, I'll just slowly continue on the webinar, right? Feel free to chat in the chat panel. Okay. Now, deciphering jargons. Okay, one thing I want to do, right, is I want to decipher as much jargons as possible, right? And if there's any jargon which you guys are not familiar with, send it in the chat section. I will do my best to answer them, right? If there's any stuff that you might have encountered recently and like, man, what does that even mean, right? Just send it. I'll do my best to answer it, right? Carlos from Oxford, UK. That's nice, man. That's nice. Right, we got Nutuli, right, South Africa, right? Guva Mombe from Zimbabwe, and we got Fatima from Philippines. Oh, that's very nice. Now I went to Philippines a couple of years back. Yeah, I went to Philippines a couple of years back. I think I went to Smoky Mountains or something, or some kind of a mission trip or something. Right? Yeah, Philippines, really nice place. Right, I love Jollibee from there. Right. All right, man. All right. Now let's continue today's session. All right. Deciphering some jargons. Okay. Now, pips, right? We always see people talk about pips, right? Like, hey, I made 10 pips, I made 50 pips, right? In trading. Now, when you see pips, the only thing you need to know is that they are referring to literally kind of points, right? So there are two kinds, right? Anything that ends with /JPY, right? So you can talk about AUD JPY, USD JPY, blah, 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 /JPY. And you can talk about all those that end with /USD or /anything else, right? Most of them, right? A pip refers to the 4th decimal place, right? This is a pip, right? This is a pipet, but people rarely say I made 1 pipet or something, right? People rarely say that, right? Most of the time people will say I made 0.1 pip, which is equal to 1 pipet, right? So when someone says, oh, price has went up by 10 pips, right? It basically means that price has went up, to 0.010, right? This is 10 pips, right? The 4th decimal place. 4th decimal place, each one is, 1 pip. So if it goes up 10 pips, it goes up to here, becomes 10 pip over here. For yen, it is the 2nd decimal place, right? Over here. So anything with a yen, if it says you go up by 1 pip, you're referring to the 2nd decimal place. If you go up by 10 pips, you basically means that it goes up to, 0.10. Okay. Yvonne from South Africa, welcome. Thanks for joining us, right? Very fun session, right? We pretty fun session in this webinar. All right. So yeah, so people talk about long or short, right? Long means you're buying. Short means you're selling. That's all you need to know. Okay. Long means you're buying. Short means you're selling. That's all you need to know. Hawkish and dovish, it means two different things. Okay. Hawkish basically means that it's hawkish. People who are hawkish, they usually are in favor of currency appreciation. They want the currency to strengthen. They want interest rates to increase, right? And their objective is to reduce or kind of contain inflation, right? For people who are dovish, right, they are usually on the side of currency depreciation, meaning they want currency to get weaker. They usually want the interest rate to decrease, right? And usually the objective of doves is essentially to stimulate the economy. Okay. Now, that's all you need to know about hawkish and dovish. You see people throw it around a lot, right? Usually, it's just people who are hawks, they want the currency to strengthen. Think about hawks, they're very aggressive. They want currency to strengthen. They want to increase interest rates, right? Attract more. They want to increase interest rates, right? And people are dovish, they're milder. They want currency to depreciate. They want the interest rates to decrease. Okay. Now, lot size. Lot size is basically lot size you use to trade. So when someone says, how many lot sizes do you use, when you trade, you're like, oh yeah, I put in 0.1 lot, 0.2 lot. They're just referring to, to MetaTrader 4, MT4 when you take a trade. Okay. Because the MT4, they use lot sizes to trade, right? Major, minor, and exotic currency pairs, very simple. Majors are anything with /USD behind. Okay. Or have a USD in it, like USD / JPY, USD CHF, right? Anything with USD in it, we consider it a major. I know it's a little bit biased, but but apparently anything with USD in it is considered a major. Minors are anything with usually any of the other currency pairs, other I think it's G8 or G7 currency pairs, right? We're looking at the AUD, right? You're looking at NZD, you're looking at GBP, right? So if you're looking at GBP AUD, GBP JPY, NZD JPY, all the other stuff that doesn't have USD in it, we consider it as minors, right? So someone say, hey, sometimes people call it minors, sometimes people call it crosses, right? But sometimes when you hear people say, it's I'm trading, I only trade majors, I only trade minors, right? You're like, wait, why in the world are you talking about major or minor, right? It essentially just means this: majors, anything with USD in it; minors, anything which is more any of the other crosses, the major G7 countries. And exotic currency pairs are those that are a little bit more exotic, South African rand, right? Dollar ZAR, all these China yuan, right? All these different not so popular ones, right? We consider them exotic currency pairs. Okay. We talk a little bit about, there are three major sessions that look at: Tokyo, London, and New York sessions, right? These are the times when there's a little bit more liquidity, so to speak, right? London and New York overlap. We call it as overlap. Before the markets close, there's actually a time where they overlap. That is where there's a lot of volume, right? But that does not mean it's the only time to make money there. There are many ways to make money in trading. And today I'll be giving you the foundations of, giving you the foundations of how to do that, all right? Anyone who says bullish means you're going up, bearish means you're going down. Okay, simple stuff. Don't want to jump too much into it. Safe haven. Safe haven is basically, how do I explain it, right? Safe haven are places, are instruments where people flock to, when things are risky, right? You're looking for a safe place to go to, right? And that's what kind of safe havens are for, right? So for example, Russia and Ukraine war, right? Man, things are heating up. People are like, oh, could this be another world war? Right? Is this going to be rather scary? Right? If it's a little bit scary, what they're going to do is like, I think this is a little bit too risky for me. I want to put my money in a safe place. So what are these safe places, right? One of it is, of course, gold. When everything collapses, when all the world's economies collapse, if you hold on to a bar of gold, there's this gold does not have a country it belongs to. Gold is just gold, it's pure material, it's heavy. How much is worth its weight in gold, right? There's a popular saying, it's worth its weight in gold, right? So gold, is the safest so-called thing, safe haven. And then there are currencies which are safe havens like the USD, right? Because people think the United States is so huge, there's no way in the world that the United States can collapse, right? So people think of the US dollar as a safe haven. People think of the franc as a safe haven. Switzerland, people think of Japan as a safe haven, right? People even think of the Singapore dollar as a safe haven, right? These places are very safe, right? Very safe, right? So safe havens, are basically places where people, when the going gets tough, when the going gets risky, right? It attracts a lot of attention. All right. Another thing that we look at is, of course, risk on, risk off. Basically, you just think about risk on, risk off. In a sense, like risk on means there's a lot of appetite for risky stuff, right? Let's go into Bitcoin, right? Let's go into equities. Let's go into Tesla. Let's go into the stuff that are a little bit riskier, right? But when people say risk off, right, basically means that you think about a switch, like you're trying to turn the switch off. Risk off scenario, let's play it safe, right? Let's go. What happens risk off? You don't have the appetite for risky stuff. You go to safe havens, for example. So you can see how they're related over there, right? Bid and ask prices, right? You sell that bid, you buy ask, right? That's basically the spread. When people talk about spread, it's the difference between the ask and the bid price, right? It's a difference between the ask and the bid price, bid and ask price, sorry, right? So this thing in between is called the spread. Liquidity, very simple. Liquidity just means how how much volume there is in a particular kind of instrument. Okay, what I mean by that is if you wanted to sell your iPhone, right? If you wanted to sell your iPhone, there will be a lot of, you go to any of these places where you can sell second-hand phones, right? You go to any of their plans and say, I want to sell my iPhone. There's easily a lot of buyers who want to come in and say, yeah, sure, I'll buy your iPhone. This is the price I offer you at, right? And the prices all tend to be pretty close to each other, right? So if you have a very popular product, like a major currency pairs, popular products, a lot of eyeballs on it, a lot of people trade it, right? Like an iPhone, you want to try to sell it, people can easily come and tell you like, okay, I'm going to offer you this price, and they're not going to differ that much from each other, right? But if you have a Nokia, right? You have a Nokia 3210, right? One of these old Nokia phones that you have, right? And you're like, hey, you go out there and say, anyone wants to buy my Nokia, right? People are like, what? Some of them might be saying, what the hell is that Nokia? What is it even, right? It's like, oh, it's a handphone. No one even knows it's a handphone, right? And then the prices, you get a lot less people coming up to you, giving you offers, right? A lot less people want to buy it. And even if people offer to buy it, one person is saying, maybe I'll buy it off you for $50, right? Another person buy it off you for $100, right? So the prices differ a lot because there's less liquidity, essentially. Less people interested in trading market, less liquidity there. More people interested, right, in trading Tesla and trading euro dollar and trading these kind of big currencies, right? The more liquidity there is, the better your spread is. Okay. Last thing I'll touch on is slippage. Okay, slippage basically means when you want to enter into a trade, and the moment you press the button, right, when price might go against you or for you. Imagine, right, if your price is like falling, price is falling, right? And you decide, okay, I want to sell, right? You click here, sell here, right? Price can either go down or go up, right? So if there's negative slippage, it means that you got in a position that's not as good. You wanted to sell here, but you got in over here, right? Positive slippage is that you wanted to sell here, but you got in over here, right? Got in slightly better, right? So usually in trading, slippage is a common thing. Slippage is everywhere. Sometimes you'll be slipped. Slippage is positive. Sometimes slippage is negative, right? It affects both ways, right? But slippage always happen. All you need to know is that what slippage means is that when you enter a trade, usually it will there's a little bit of time between from the moment you press that button, the button, right, to the time you actually get into the trade. The little bit of time difference, right? That's where slippage can happen. Now, of course, if you want to reduce slippage, Some of the things that you can do, get a good internet connection. Make sure some people have VPS, virtual private servers, which the servers are closer to maybe IronFX trading servers, so there's less latency. I'm not sure if many of you guys ever played games before, but imagine you're playing a game, right? So they talk about lag, they talk about latency, right? So if you are playing a game and you're playing against this person who is on the other end of the world, right? And you two try to play together, right? It becomes very slow, right? You do something, it takes him a few seconds before he sees it. He does something, it lags a bit before you see it, right? So, but then if you are playing a game and you're right there beside, your friend who is playing right beside you, you're both looking at the same screen, same TV, and you're just playing, right? There's almost zero, yes, practically zero latency, zero lag, because you two are very close to each other, right? The further you are, the more latency, the more lag, the more slippage, right? So that's the concept you need to wrap your head around, that you can actually reduce slippage through these ways, right? Of like getting good VPS, that's near your broker server, stuff like that, all right? Okay, let me pause a bit. Of course, guys, if you have questions, please, I encourage you guys to send it through, all right? Don't wait until the end before you send it through. I'll do my best to answer them, okay? Now, the opening hours of Forex, right? Why is it a 24-hour market? How people are thinking, how in the world is Forex a 24-hour market? It's very simple, right? At the start of the day, right? Sydney gets up. In fact, Sydney gets up even if you're looking at GMT time like here, right? So when Sydney is up, Tokyo gets up slightly later, right? Tokyo gets up slightly later over here, right? So Sydney and Tokyo are awake in the morning. Just before Tokyo closes, right? You got London getting up, right? So this is that's actually pretty sweet spot. Tokyo London overlap, right? Actually, it's not just Tokyo, right? Many of the other countries out there, right? Asian countries, they overlap with London like now, right? For us, Singapore. I'm based in Singapore for anyone who wants to know, right? There's a little bit of overlap also. There's a little bit of trading volume, right? Before London closes, US wakes up. And this is the US London overlap. Very popular for a lot of trading volume, right? So we got a question from Darlington asking, what is the best time to trade, right? Very good question, right? And actually, my answer to that, what is the best time to trade, is that there's no best time to trade. Okay, there's no best time to trade. You trade when the market gives you the opportunity to trade. During these periods of time, you have more trading activity, right? There's more trading activity, but that does not mean you can only trade during that time, right? You might be able to find a trading strategy over here, and then the trade gets carried on all the way until here, right? Even though there's the most volume there, that does not mean it's the best time to trade. It just simply means the market is the most active there. You could take a trade, and then it might get triggered, when it reaches this time. But that doesn't mean that you don't trade. You only wait until, okay, the markets are open, like there's a US London overlap, time for me to trade. That does not mean it. It's in fact not best trading time, but it's actually most volume in trading. The most active trading time. It does not mean best. Okay, I will probably replace this with most active trading time. Okay, because I don't want to give you the idea that this time here and this time here are the best times to trade, because I've made a lot of money, right? Not trading these times, right? There are other ways to work around it. Okay, I hope that answered your question, Darlington. Now, moving on to the next one. Where's my PowerPoint slide over here? Moving on to the next one. How much time do you need to trade? Okay, so anyone want to take a guess, right? Or can you guys share with me how much time do you guys usually allocate to trading every day, right? Like how much time do you guys have to trade? Do you guys trade, 1 hour a day? Do you guys trade 3 hours a day? Are any of you guys full-time traders trade 8 hours a day, 16 hours a day, right? Can you guys send it in the chat section? How many hours, so the rest of you guys can see it too. How many of you guys, how much time you allocate to trading every day, so I can get a rough gauge on like what kind of strategies we can work on, we can look at together. Natalia, do you trade 24 hours or do you trade 2 to 4 hours? Not sure if you meant 24 hours, right? Right, we got Cyril, right? Trading an hour a day, right? Mahoda, wow, 8 hours a day. It's nice, right? We got Lama, a day trader. Day traders, I guess. Well, day trader is the trading strategy, but how much time do you have in a day to trade? It also depends, right? Right. We got Sarero, 5 hours is pretty decent, right? We got Kanaka, right? It's 5 hours. Derek, want to start trading only on New York session? I'll touch a little bit on that in a bit, right? 2 4 hours depends how busy your day is. All right, I got it, right? So I notice most of you guys got a couple of hours a day to trade, and that should form the basis of your trading strategy. Okay. Now, sometimes a lot of people ask me, what is the best trading strategy? Should I be a scalper? Should I be a day trader? Should I be a swing trader? Should I be a position trader? What kind of strategy will make me the most money? Right. And I can share with you this, that there are many strategies that's going to make you money, but it has to suit your trading style. Right. If I told you that if you only had, like, for example, Natalia, right? If she only has 2 hours to trade in a day, and I recommend her a trading strategy that requires 8 hours of constant monitoring of the market trade, she's not going to do well, right? Because she's like, she only has the 2 hours, maybe 2 hours in the morning, 2 hours in the evening, right? Maybe you only got a little bit of time to trade, but how are you going to use that? You know, if I told you that I have this trading strategy that requires you to trade 8, 10, 12 hours a day, right? You won't be able to do it, right? And there are trading strategies out there which only require you to put in 1 hour in the morning and 1 hour in the evening, right? You can be a profitable trader already. Different kind of trading styles, and it also needs to fit your kind of trading personality, your psychology, your risk tolerance level. For example, I've been trading for a long time, right? I have good trading psychology, right? But the problem with it is that, you know, I still find it very hard. Right, I still find it very hard to hold a trade overnight. Right, I still find it very hard to hold a trade overnight. When I take a trade, right, I sometimes wake up, in the middle of the night. I'm like, oh shoots, you know, did I make money? Did I lose money? So I have dreams, I have nightmares sometimes, right? That I got stopped out. You know, I sometimes wake up, it's like, did I, you know, my subconscious in my mind, you know, is running, thinking, did I make money? Did I lose money? Right? It keeps running, and it's so scary, right? That's a scary thing when you, and I know when that happened that I cannot take trades that last longer, and that I cannot hold trades overnight. Even I know all the risk tolerance, I know all the trade management, I know risk management, I know all of that, right? But my risk tolerance, I just does not sit with me that I can take trades overnight. So I might want to be a swing trader, but my risk profile, right? The way I'm built is not able to be a swing trader. That's why I need to look at day trading. I need to look at scalping. I need to close off my trades within the day. All right. So then I need to look at trading strategies that suit my kind of personality. So that's a tricky thing, right? I can see Sheriff asking, I trade most midnight, right? Is it well, right? It depends which time of the day, which country you are from. I think, if I'm not wrong, you mentioned previously, was it South Africa, right? One thing I want to recommend to you guys, right? Sometimes, you know, it might not be a good idea to trade too late at night, right? Because think about it, our brain, right? Our brain is like a muscle, right? This is a little bit of trading psychology I want to share with you guys. Our brain is like a muscle, right? Have you ever exercised before? You know, you're exercising, maybe you're doing bicep curls and stuff like that, right? You do the first 10, right? You can do it. It goes to 15, it gets a little bit tired. Do a little bit more, 20, you know, your arms get really, really tired. And, you know, the more you do it, the more tired your arms are. And it reaches a point where you can't even raise up your arm anymore because you're so tired, right? And the brain is that way. You spend most of your day thinking, doing work, going to work, you know, taking care of the family, cooking food, right? Taking care of the kids, driving around, right? And towards the end of the day, your mind, your mental processing power, right, is just not as strong as anymore, right? It's, you know, it's tired, right? It's like the brain is like a muscle. You know, have you ever came back at the end of the day and just like, man, I am exhausted. I just want a beer. I want to sit down, take a drink, relax my mind. You know, I don't want it anymore. That is your mind. That is your mind being tired, right? So imagine your mind is being tired and it's the middle of the night and you want to start trading, right? That is actually pretty dangerous because the market is tough. You know, people, the hedge fund traders, right? They go in with they even meditate before they come in. Their mind is all bright and they're ready to take on the markets, right? And they need to take it on with having that alertness, right? So sometimes it's a little bit tricky when you take on the market at night. There's nothing wrong with the time of the day we are trading it. It's more important like what is the state of your mind? Is it strong or is it weak? Are you tired or not? Because if you're tired, you might compromise on your trading strategies. However, if you work the night shift, right, you're gonna trade in the middle of the night, then it's fine. You know what I mean? Right? Oh, okay. Africa, Uganda, not South Africa. No, sorry about that, right? But nice to see you tuning from Uganda, right? Yvonne is saying that it's getting yes, Yvonne, we will be uploading this on YouTube, right? So go check out the IronFX YouTube channel. I'll be showing you guys how to get access to it. So in case any of you guys have internet connection issues and drop out a bit, this recording, it won't be uploaded right away, but you can find it over there on YouTube. Okay, but how much time do you need to trade, right? So I got all the different answers coming in, right? But I want to share with you that scalpers usually you usually need the most time in the day to trade. Okay, scalpers need the most time in the day to trade, right? So we're talking anywhere in 4+ hours to trade. You know, you need to dedicate that much time. Okay, swing traders, if you ask me, need anywhere from 30 minutes to 1 hour, right? You should not need too much time to trade. You look at the markets a little bit every day, should be enough. Okay, if you're a day trader, you need at least more than 1 hour to trade. You need to look at the markets at least 1 hour in the morning, 1 hour in the evening, so maybe a total of 2 hours, right? And if you're a position trader, maybe you don't need that much time. You just need 15 minutes every day. Check your charts, make sure everything is right. And it's for it's a long-term kind of thing. You don't need to dedicate that much time to trade. So depending on the time availability that you have on the answers that you gave me earlier, right? It can give you two different, what's the word for it? It can give you two different kind of, not say two, four different kind of choices on like the kind of trading style that you want to use to trade, right? If you have a lot of time to trade, you can consider a combination of day trading, swing trading, like a dear friend Natalia, 2 to 4 hours. You can do a combination day trading, swing trading. You can even do position trading and scalping if you want. But if you only have that little bit of time, half an hour to trade, right, you might want to consider swing trading, right? You don't have that much time to trade, you might want to consider swing trading. You might want to consider position trading. We're going to teach you all these different kind of trading strategies which you can use in trading, right? And how you can apply it across the different time frames. Okay, so that's an important consideration to take note of. Okay, now I do want to touch a little bit on this concept on how much time it takes to master trading. Okay, a lot of you guys, I'm not sure how many of you guys, how long it has been since you guys have started trading, right? But I shared this a little bit at the start of the webinar. I want to share it again over here right now because I see a lot more, about double or triple more attendees have came in. That I'm a young guy. Okay, I'm a young guy. I'm 32 years old, right? I just became a dad 3.5 weeks ago, right? So I run an entire prop trading firm, right? Trading full time, right? And I do want to tell you that you can be a profitable trader. You don't need. I know I'm not here with like, in a big suit and stuff, right? Saying that I have 30 years in Bloomberg or Thomson Reuters and that you need all this experience to be a good trader. Right, I'm here to tell you that I've went down the path of blowing up account after account after account, total of about 7 accounts. I traded for a long time, many years, right? I think close to a decade. I learned the wrong stuff. I learned so much of the wrong stuff so that I can finally filter out and know what's the right stuff to learn, right? And I want to let you know that you can be a good trader in just 30 days, right? You can learn the correct knowledge in 30 days to be a good trader. But you just need to practice it. You need to practice it to be a good trader. Okay, learning is one thing, trading is another thing. That's an important thing I want to let you know. Learning is one thing, theory is one thing, and trading is another thing. And that is why I want to take this opportunity to let you guys know that this new series we have with IronFX. Thank you very much. Thank you very much, guys. Yeah. Thank you, Lama. Right. Thank you, Sarun, Kumar. I'm Sharif. Right. Yeah. It's I'm now a dad, so not sure you can see my eye bags, but maybe tomorrow, maybe the day next week, you start seeing me have like really, really mad eye bags because oh man, I never knew a baby could have like could drink that much, can poop that much, right? It's crazy, right? Now I'm able to even trade the US session because I'm stuck awake all night. But yeah, it's a bundle of joy, right? It's a 3.5 weeks, haven't reached his first month, right? So yeah, it's gonna be a fun time, right? But now it's important thing that I want to share with you guys too, that IronFX, we are dedicated, right, this to really helping you be a better trader. How are we going to do that? What I'm teaching you today is a theoretical session. We're teaching you theory. But the great thing is that tomorrow we have a live trading session. Very exciting. Let me just show you how to get access to that. Okay. Live trading session. Bam, coming here, right? I'm going to come here. You want to go to IronFX.com. Okay. You want to go to IronFX.com. You want to go to, just let it load a bit. I believe it's where is it? Schools, IronFX school webinar, right? Webinar. You can see that does not look like me, right? But yeah, you can come down here, click on English, live trading session tomorrow. Okay, live trading session tomorrow. That's where I take on the markets together. It's very, very exciting stuff. I'll actually share with you some of the juicy trades that I have found. Right, I'll be showing you how we actually take on the markets. You'll be looking at the way I do charting, right? Do analysis, right? Do Fibonacci, retracements, extensions, expansions, support, resistance, trend line, right? Channels, right? A correlation. I'll be doing everything, right? You'll be watching me trade live, and you can also ask me if you have a request on euro dollar, you have a request on Aussie dollar. That'll be the perfect time where you can jump in. You can ask me, I can answer it, right? It happens same time, same place. Right, I'm gonna copy this link address. I'm gonna send it to you guys. Right, same time, same place tomorrow. Please go register for it. Trust me, you're not gonna regret it. We're gonna look at the markets. It's literally living and breathing the markets. Right, we're gonna look at it. We're gonna trade it. It's gonna be a fun time. Right, gonna look at some juicy setups. Right, we have a hit rate. Right, I have a hit rate of 70-80%. Right, pretty good hit rates. Right, which I hope that the great thing is that all these webinars are recorded for you to review, right? I dare to do that, right? I dare to stick my neck out there, right? Call the trades. If it's profitable, right? That's great. You'll see me in next week's session, right? We celebrate it together. If I make the losing trade, that's part of trading, okay? But I will not run away from it, right? And that's the level of that's the level of accountability I hold myself to, right? And of course, this is another sneak preview which I'll be showing you guys right now, which is the IronFX VIP room, and how you can get access to it. I won't be giving you guys the link to it yet, but I want to show you how it looks like, right? Because we should be releasing this over the next either tomorrow or next week, right? And it's a VIP room, right? As long as you're IronFX client, you get access to this. I'm going to share the screen with you right now. Super awesome stuff, right? New share. Okay, here you go. This is the screen. This is the IronFX VIP room, right? It looks like it's like a chat room kind of area, right? Where you can come in, right? We have a whole gamified stuff over here. So the more you post, right, the more you chat, you will rise up the ranks, right? As you rise up more ranks, we're going to give you different prizes. Maybe give you different, like I have a lot of custom indicators I can give you there. But the important thing about this platform is that when you're IronFX client, and let's just say we're looking at euro dollar over here, right? We're looking at euro dollar over here. So I need to resize this, right? So imagine you have a question, right? You're looking at euro dollar and like, man, Desmond, is this a good time to buy? Right? You come in here, you draw this support level over here, right? And you say, hey, hey Desmond, right? Is this a good support level, right? What support level am I referring to? Just need to highlight my text over here. Click on this button called link object to text. You will click on this button over here. Click on it. Okay, I'm referring to this horizontal ray, right? I'm going to click confirm. Now, what happens when you send this message through? Of course, you can see again a little bit of experience points up there, right? If I'm reading this message, or if you're reading this message, right, say, hey, Desmond, is this a good support level? All we need to do is to hover our mouse over this, and you can see it lights up. So I know exactly what you are referring to. So I can come into a little dedicated discussion with you, and I can say, yeah, this happens to line up, right? Maybe this happens to line up with a, not sure you can see it. Yeah, it happens to line up with a 23% retracement, right? What 23% retracement? Highlight this, link it to this Fibonacci retracement. There you go, 23% retracement. right? Oh, sorry, and send the message through. So you look at this, can light up. That is a 23% retracement I'm looking at, right? And we can have a whole dedicated discussion on this over here. So we have, we're going to support the majors, we're going to support the miners, we're going to support the commodities, the gold, the silver, the oil, right? We're going to support the indices. It'll be a whole nice VIP room where you can get direct access to me, the other IronFX analysts out there. You get to ask us questions on the markets. We got to answer you, right? But most importantly, you get to practice what you learn. Right, you get to practice what you learn here, in the Tuesday sessions, right? In the next few sessions, you're going to talk about technical analysis, fundamental analysis, go on and on and on. We'll cover more advanced topics along the way, but it'll be a fun time where we're gonna can I show you all the webinars, right? Yeah, no, I think we haven't added the rest yet, but this is a place where you can practice your analysis to be a good trader. Okay, right? I won't be giving you the link to it, right? Maybe you can tune in tomorrow or next week, and I'll be showing, if it's ready by then, we'll release it to you guys, right, to get access to it. Okay, pretty awesome stuff, right? Pretty awesome stuff. Okay, but now let me just bring ourselves back to this. How can I bring it back? Yeah, let me bring back to the screen over here, right? And what I want to show you guys next, right? What I want to show you guys next is how much time it takes to master trading. What I'm trying to focus on here is that, yes, I'm going to teach you, right? You just need 30 days to learn the right stuff, but you need to practice it. Where to practice it? Practice it in the IronFX VIP room, which we'll be giving you access to, right? And that is how you take your trading to the next level, right? Because you can be practicing, but if you're practicing and applying it wrongly, it's not going to help you in your journey to be a better trader, right? We're going to teach you how to do that, right? It's going to be a fun time. So yeah, stick around with us, all right? Now, next thing I go to fundamental versus technical analysis, which is better, right? I do want to let you know that it's good to have a good understanding of both, right? Which will you choose? Depending on your trading strategy, it depends, right? Depending on your trading strategy, you might want to learn more fundamentals or you want to learn less fundamentals, okay? What do I mean by that? Okay, for example, if you are a scalper, right? If you're a scalper, right? Let me see. If you're a scalper, fundamental analysis is not that important to you, right? What do I mean by that? Let's just say you are bullish on gold, right? Your fundamental view is that because of all the uncertainty in the world, for a long time, this market correction, has been coming, right? The Russia-Ukraine war being dragged out, you are bullish on gold, right? You expect gold prices to rise over the next couple of years. Now, that knowledge is not going to help you trade the next 5 minutes. That knowledge is not going to help you trade the next 1 hour on gold. It doesn't really help you that much. It'll help you if you're a position trader and you take a long-term trade on gold. You're looking at a 1 week, 1 month chart and you're taking a long-term trade. Yeah, that makes sense, right? But that knowledge is not going to help you if you're going to just take, is gold going to go up or down in the next 10 minutes, right? If I'm a scalper, right? That knowledge is not going to help you, honestly, right? So that's the important thing I want to tell you, right? Fundamental analysis, it's important, but it all depends a lot on your approach to trading. Fundamental analysis is more important for position trading and swing trading, less important for scalping and day trading. In fact, if you're scalping and day trading, man, you need to really, really be good in technical analysis. You need to be very good in technical analysis, right? You want to be a good day trader. You want to be a good scalper, right? If you're a position trader, you need to focus less on technicals, more on fundamentals. Okay, how fundamental analysis is useful as a scalper, right, is what we call this thing called known unknowns, right? So let's see if I have it over here. Okay, IronFX, right, platforms, economic calendar, right? IronFX has a great economic calendar, right? I want you to take a look at it, right? And this is what I call known unknowns and how you can use it in trading, right? So IronFX economic calendar, right, over here, right? Go close this thing off here, right? Anyway, IronFX has this YouTube live event, live trading throughout the day. Great stuff. Go check it out, right? Some people say they can't see my screen. Are you guys able to see my screen? All right, I'm not sure if you guys are able to see my screen. I'm gonna pause for a second here while I wait for your answers. Yes. Are you able to see the IronFX economic calendar screen? Cool, cool, cool. All right. Maybe I was clicking the wrong stuff earlier. All right, but yeah, so this is the economic calendar, right? So let's just say we want to know what's going to happen tomorrow, or yeah, let's just say today, right? What you want to look, major thing you want to look at here is volume, okay? Volume. So imagine if I'm trading, right? There's a big news event on here, right? The GFK consumer confidence, right? Or let me see if there's any others for today, right? Okay, GFA consumer confidence, right? Dangerous stuff, right? There's a lot of volatility here. If I'm a trader, I'm a scalper, right? I might want to stay out of this currency, maybe the euro, right? Right before this, because I might be right on the trading direction, right? But because of the volatility, I might be wrong, right? Price might spike me out and I might get stopped out, right? So that's a dangerous thing, right? Or that's the important thing about so-called fundamental analysis, looking at the economic calendar and knowing when the big news release is going to happen. For example, the first Friday of every month is non-farm payroll, right? If you were a scalper and you tried to scalp some trades, not knowing that non-farm payroll announcement was going to come, right? You might be correct, but the non-farm payroll will just bam, go crazy. You get stopped out and you're like, whoa, what hit me, right? So known unknowns are important to be knowing when looking at the economic calendar will help you know when these news events are going to come and help you know when to avoid them, right? More important for scalpers. Day traders, the news events are a little bit more important, but it's very, very hard for you to predict, what the result is going to be, right? So as a day trader, unless you're really crazy about econometrics, trying to forecast this kind of data, it's really, really tough to do that, right? What you do well is to also avoid, if your trade is almost at its profit target level and you're reaching a big news event, you might just want to close it off first, right? Because it's not worth it. The big news event might cause price to go in another direction, right? Might go against you, and it's just not worth it, right? You just want to close off your trade first. Okay, so that's the meaning of fundamental analysis is useful, right? But how you actually apply is very different, right? Longer term trading, yes, it makes more sense, right? In our technical analysis and fundamental analysis 101, which we're going to cover in the next webinars, right? I'll actually be showing you a little bit more about how we won the awards that we won by doing combination of fundamental and technical analysis. Very exciting stuff there, okay? Of course, when it comes to trading, there are fundamentals. Basically, good economy means that money is going up. Bad economy means currency value is going down, okay? And of course, technical analysis, whole bunch of stuff, but I don't want to focus too much into that. There's harmonics, there's gun angles, there's moving average crossovers and stuff. A lot of stuff that you can do, but some of it I agree with, some of it I don't agree. Gun angles I don't agree with, okay? It's based off astrology. It's literally you're looking at stars to trade. I believe a lot in harmonics. I believe a lot in Fibonacci. I believe a lot in market structure, correlation, support and resistance, Fibonacci, right? We'll be going through that very, very advanced courses, beginner, intermediate, advanced down the line. I'll be teaching you how to use that to make money, okay? I'll be teaching you how to use that to make money, right? But those will be in the upcoming webinars. Every week we'll be doing it. Sometimes it's me, sometimes it's going to be my other prop traders, Cassandra, and Annabelle, who will come and do it. But for starters, right, I'll let you know that fundamentals basically are looking at the health of a economy. Technicals is more towards this kind of technical analysis, okay? And the last thing I want to touch on, right, which products should you focus on, right? Now, when it comes to trading, you can focus on a lot of stuff, right? So you notice that, of course, IronFX down here, when you talk about markets, there are so many different markets that you can trade, right? Where is it? You can trade forex, metals, commodities, indices, futures, shares, a whole lot of different stuff. But remember guys, don't trade for the sake of trading. A lot of people trade for the sake of trading. Why is that wrong? What do I mean by that? Trade for the sake of making money. Trading is just a means to make that money. Okay? If there are no trades, don't trade. Okay, don't trade cryptocurrency because it's exciting. Trade cryptocurrency because it's going to make you money. Don't trade Tesla because it's the talk of the town. Trade Tesla because it's going to make you money. Remember what is your goal when you are trading. Okay, remember what is your goal when you're trading, because this is very, very important, right? This is very, very important when it comes to trading. All right, let me just see. Yes, yeah, it's very important when it comes to trading. You must know your intention. Okay, you must know your intention when it comes to trading, guys. Right? Now which product should you trade? I'm going to focus a lot more on the liquid on those products which are a little bit more liquid. Right? I'll be focusing a little bit more on forex. Right? But you can just easily trade forex and metals. Gold is usually a good one to trade. Right? Forex, right? Usually focus on the majors and the minors. I tend to stay away from the exotics. Indices, really good one is the DAX, German DAX, right? S&P, right? Nasdaq, pretty good ones. Commodities, soft commodities, I don't usually trade it. Shares are actually pretty good to trade, right? But I tend to look at the major ones, right? The big ones, right? I'll be showing you how to look at it in future sessions, right? No worries, Sharif, right? I'm sorry. Yeah, feel free to send the questions now, so I'll answer them before we end off today's webinar, right? But yeah, it's I'll be showing you these are a whole range of stuff you can trade, but that doesn't mean you should trade everything. Okay, guys, don't just jump in and trade everything. Okay, don't just jump in and trade everything, right? I'll be showing you some of the things that technical analysis tends to work better on certain pairs. Fundamental analysis tend to work better on certain kind of instruments. We'll be covering that in the future topics. IronFX will be launching an academy in the next couple of weeks, right? So there'll be a pretty good academy. It'll be integrated maybe with the VIP room, right? I don't have a Forex academy. I don't offer private training, right? We usually are institutions. I work directly with the institution. So usually we're invited guests, like for example, IronFX, right? They invite us, a very special partnership with them. Then we come down and we teach you guys. Okay, I don't teach any other courses out there, right? Because I'm a full-time trader myself. I don't have time to teach courses, right? And I don't want to take your money, guys. Right? I don't want to take your money. I'm here on behalf of IronFX to teach you guys. So tune in, come on, man. Tune into the sessions, right? In the future sessions together. It'll be a fun time, right? It's free and it's very high quality. Okay, it's free, it's very high quality, and yeah, you get to ask me all the questions that otherwise people pay us thousands of dollars per hour just to have a consultation with us. Otherwise, I don't think it's something you want to do, right? Just as long as you're a client with IronFX, you get to benefit this. You get a benefit from this arrangement that we have with them. All right. Anyway, thank you very much, guys, for sticking throughout this webinar. Please, I hope to see you guys tomorrow, right? Yep, you can go and get it on YouTube, Yvonne, right? Please, I hope to see you guys tomorrow in the live.
These are the natural resources that make up the building blocks of the global economy. Hard commodities are mined or extracted from the earth and include gold, oil, copper, and natural gas. These include agriculture products such as coffee, wheat, and lumber, and livestock such as hogs and cattle. Commodity prices are mainly determined by supply and demand, the weather, global economic development, and technological advances, political events, and the US dollar. For instance, changes in supply have an impact on the demand, so low supply leads to higher prices. In the agriculture sector, grains can be very volatile during the summer months or during any changes in the weather. Population growth and limited agriculture supply can provide opportunities to profit from increasing agriculture commodity prices. Trading CFDs on commodities is the most convenient way to access the commodities markets. A CFD is an agreement between the buyer and the seller that pays the difference in the settlement price between the open and closing trades. With CFDs, you're speculating whether the value of the instrument will rise or fall. One of the benefits of CFD trading is that you're trading on the expectation of a price movement, so you don't actually buy or take physical possession of the underlying asset, and you can still make a profit when the price of the commodity falls in value. not just when it rises. CFDs give commodity traders much more flexibility and more opportunities to earn from market movements. Commodities are an ideal way to diversify your portfolio. The prices of commodities tend to move in the opposite direction to stocks, so investors also demand on commodities during periods of market volatility. In particular, investors choose to invest in precious metals, particularly gold, which is known as a safe haven asset. Another reason is that precious metals can be used as hedge against periods of high inflation or currency devaluation. However, commodities can be risky investments because they can be affected by uncertainties that are difficult to predict, such as unusual weather patterns, epidemics, and natural and human-made disasters.